Welcome back to the Dividend Diplomats YouTube channel. You've got Bert the Hurt, as always, over here, and you got the Big L, and we can't wait to talk to you about the Dividend Diplomats Stock Watch List for March 2021.
You know the drill. Smash the subscribe button. Give us a thumbs up. Thank you, everybody, as we continue our journey now towards 10,000 subscribers. It's crazy that we're getting closer to that level, so everyone, thank you. This Lanny's showing thank you, and thank you. But this isn't just any special watch list that we're going to talk to you about today. It's definitely not my dividend stock watch list. It's Lanny's. So, Lanny, how pumped are you to talk about these three stocks that you're watching?
Excited. No, you know I'm pumped up, and honestly, the whole month of February was kind of interesting. We saw the market go from like 3,700, pop all the way up to almost 3,900 on the S&P 500 index, and plummet back down to 3,700. Obviously, a lot of volatility. You had the Wall Street bets. You had the yin-yang back and forth with the economic impact payment for the next round for the hopes of the $1,400 checks.
Yeah, it's fun watching the market right now. It seems like there's some noise going on. There's no big collapses like there were last year at this time, thank goodness. But it feels like it's an exciting time to see the economic numbers come out and see how the market's going to react.
Unemployment filings are still happening, though, and the United States is still not in the best position, but companies right now are doing very well. If you haven't caught any earnings releases or even our dividend increase videos that we put out week after week, the dividend increases are back because companies are roaring and firing right now on almost all cylinders, Bert.
Exactly. So here's the million-dollar question is, how do we find these dividend stocks to buy that will give us these dividend increases that are back?
How do we find them, Bert?
That's easy. Our Dividend Diplomats Dividend Stock Screener with three simple metrics. 1, PE ratio less than the S&P 500. 2, dividend payout ratio less than 60%. 3, a history of dividend growth where we look at the average dividend growth rate and how long a company has increased its dividend. And last, but definitely not least, after it passes the first three metrics, we'll look at the bonus metric of the dividend yield. So Lanny, I'm excited for everyone to hear the three stocks. I know what they are. I'm excited, so you guys are all going to be excited as well. Who are the three companies on your watch list? Let's start with the first one.
Well, to backstep, I usually try to keep it to 3 dividend stocks just because I don't want to be watching 14 stocks and just, oh yeah, let me just keep updating the stock price each and every hour, every day to see what's going on with them.
Oh, I thought you were going to say that you didn't want us watching you for 14 hours every day, which I was going to say we would all have appreciated that. But
I like to keep them to 3 stocks that I'm building in the portfolio, whether that's mine or my wife's. And essentially these 3 stocks are passing some of the metrics. Some maybe they're not passing all of the metrics, but they are at prices where you kind of raise that people's eyebrow a little bit, and you get a little bit of excitement going through your veins to add some, dividend stock, add some dividend income, and bolster those positions. So.
And you own each of these 3 companies already, right? Between yours and your wife's portfolio?
You got that right, Birdie.
Awesome. So you're going to be watching not only companies, great dividend stocks, but positions you already own to add to get to that full position and keep growing your income in stocks that you've already known that you've liked and bought in the past. Fantastic.
But yeah, to jump right in with dividend stock number 1 that's on the dividend stocks to buy list for March 2021. Again, we talked about them already, but the Oracle of Omaha keeps following us, keeps following our purchases and our watch list, and we're both very excited about Verizon Communications, ticker symbol VZ.
Yeah, for the record, everybody, we were onto Verizon before Buffett bought them, so just remember that.
Just remember that.
Yeah, so let's break down here some of the metrics for Verizon. Obviously, let's start going through the stock screener. What are your thoughts about them, Lanny? How are they doing price-wise?
Well, price rise, when I put out the watch list on the blog, the stock price, honestly has been pretty volatile because when Warren Buffett announced Berkshire's new position of $8.6 billion in Verizon, again, the leader of 5G because they outpaced everybody in the 5G auction that took place, the stock price actually rose to above $57 per share when they were trading in the 53 to 55 range. At the time of my writing, or at the end of February, they were trading at just over 55. And today, right now, they're actually just under $55 per share.
So that price hasn't moved at all, has it?
Hasn't really moved when you actually look at it from a longer time period standpoint. But again, to get into the Dividend Diplomats Stock Screener metrics, Bert, I'll kick it off on the first one. I'll hand it to you for the payout ratio, and I'll finish with some growth.
Sweet.
To get into the price to earnings ratio, our first metric, Verizon analysts are projecting right now an average earning estimate of $5.08. So if you roughly take that $55 share price and divide it by that 5, that price to earnings ratio is extremely low, at below 11 times forward earnings.
That is definitely lower than the market, which is what we look for, because the market right now is hot. It's over 35x, and it has been consistently for a long time. So that's a nice big check.
So Verizon gives it the big red check, Bert. So what about the second dividend metric?
Well, they pay a $2.51 annual dividend. So you divide that by the forward earnings that Lanny referenced. That gives you a perfect dividend payout ratio of just under 50%. Why do I say it's perfect? Even though it's below 60%, we think a perfect payout ratio is between 40% and 60%, as a company can reinvest in earnings and also pay shareholders a nice dividend. So yet another big red check here for Verizon. And Lanny, round out third and head home. What's the dividend growth here for?
So the dividend growth streak that Verizon currently has, again, which is consecutive dividend increases with no interruption, they're at 15 plus years, and I know they're going to make it 16. The caveat here is that the growth rate's getting lower and lower. It kind of reminds us of AT&T a little bit, as we always put out those AT&T videos.
Yeah, we are on the hunt. We are always watching AT&T for their dividend growth, which still hasn't happened, and it seems that, Verizon is moving in that direction too, of a higher yield, not quite as high as AT&T, but the lower dividend growth too.
Yeah, so the growth rates are just around 2 to 3% right now for Verizon. So beating inflation by a little bit. But again, I think Bert will also talk about maybe some of the yield as that bonus metric for Verizon.
You got it. Who wouldn't want to talk about the dividend yield? Verizon's dividend yield is not nearly as high as AT&T's, as we like to reference, but it is above 4.5% currently at the time we're filming this video. So hey, it's a nice yield right there. That's way higher than the S&P 500's average dividend yield, which is lower than 2%. And it is way higher than that online savings rate that you are not getting at your online savings.
I've had a goal of trying to get to 50 shares here in Verizon by just kind of inching in a share here, 2 shares there. So far it's been working out, but I'm not done yet.
Dividend stock number 2, everybody. Lanny, want to go up to your medicine cabinet here and see if you can find some of the products of this company on your watch list?
Don't mind if I do, Bert. What about your shower?
Yeah, you'll probably find some in there as well. And hey, maybe get some tea, brew up some tea here for the second part of this, because you'll have one of their tea bags.
Finish it off with that Klondike bar, bite my hand off or something?
Yep, and then when you want to clean your hands, just take some of the soap, call it a day, and just head to bed.
All right, Bert, you want to kick us off with the 3 metrics here for Unilever stock?
Yeah, of course, Lanny. Let's just jump right in. When you wrote the article, Unilever stock price was at $52.06. Average forward earnings, $3.06. It's a price earnings ratio of 17 at the time. Since that article was written, Unilever's price has jumped up a little bit, not a lot, $53.48. So it's not a big change in the PE ratio.
Just a little bit.
Yeah, that small amount is still way below the S&P 500. Jumping into the dividend payout ratio here, we estimate $2.05 for the dividend because it is not an American-based company, so the currency in the dividend is always a little off, making it a nice estimate for Lanny, his favorite game.
We'll go conservative.
Yeah. So with the earnings of $3.06, that gives you a payout ratio of 67%.
Ooh, Bert, that's above that 60% range.
That is, but honestly, there's still plenty of safety before it crosses 100%. That's really what the 60% is designed to. It's designed to help us make sure that dividend is safe, because you cannot pay out more than you earn or have a payout ratio of greater than 100% in the long term. That's not sustainable. So 60% helps us identify companies that have a safe dividend, pay a nice dividend, but aren't threatening that. So 67, not that concerned for me.
And a positive sign was Unilever also increased their dividend by about 4%. So you know that even if they see their own payout ratio, that they're at least comfortable with increasing their dividend, and you would expect management's team to be pretty smart when they're doing this. So again, a nice increase earlier this year at 4% with that 67% payout ratio.
Yep, I see why Unilever's on your watch list. And if the price were to come back down a little bit, or hey, even at these levels, I may be buying too, because it's the position I don't have, and it'd be nice to add to my portfolio or my wife's.
I want Unilever stock, and I want it now.
It's my money and my dividends, and I want them now.
So Unilever, again, dividend growth unusual because, again, it's hard to do with the international-based company. But, their growth rate's usually in between the 3 and 6%. And they usually do it every year.
Yeah.
So Unilever, again, a nice 3.6% dividend yield right now, trading at just over $53 a share. Not a bad price.
Number 3 is going to have us thinking young. Lanny, who is this third company on your watch list?
This third company might be on Bert's 5
Oh, that's
always
right.
buy dividend stocks.
That is
Bert,
right.
You can't forget about your own list, you mother...
Yeah.
Son of a...
Exactly, Lanny. Not sure what he's going with, but hey, number 3, Pepsi, ticker symbol P-E-P.
Pep.
Yeah.
This is the Pep. Hey, we ain't talking about pizza, though.
On your list here, they are the soft beverage giant with the nice Frito-Lay snack portfolio on the side too, with some of those brand names that include your Pepsi, Tropicana, Quaker Oats, Ruffles, Lipton, Fritos, Doritos, 7-Up,
10,
9, Cheetos. You got some Starbucks, Aquafina in there, Pepsi Max. Hey, and let's not forget SodaStream.
And your naked drinks.
Exactly. So Lanny, let's list out the metrics here. Why don't you go through the stock screener for Pepsi?
Well, first metric, we're going to have to start with the price to earnings ratio, as always with Pepsi here. Again, at the time of the writing, they were trading at $129.19. However, it's good to note that Pepsi's stock price actually is lower at the time of the video at just under $129. Now, analysts expect right now forward earnings in 2021 to be about $6.05. So doing the math, they actually trade at in between 21 to 22 times forward earnings, which may seem expensive, but they are cheaper than Coke, KO, and lower than the S&P 500 index.
Yep, so there it is. A nice blue check here for Pepsi. Their dividend payout ratio, they pay $4.09 annually in dividends. That gives you a payout ratio of 67% when you consider those forward earnings. So hey, just like Unilever, I don't need to repeat why we're comfortable with a 67% payout ratio.
Didn't they increase their dividend earlier this year?
They did. That's why I was going to talk to you about the dividend growth, Lanny. What was that increase?
Well, that increase was just over 5%.
Yeah.
So with the payout ratio creeping up a little bit, naturally the dividend growth isn't as strong as what it was in the past years. What was it? Usually between 7, 8, 9% for Pepsi?
Yep. And here's what's cool about Pepsi. With that increase, they are 1 year away from becoming a dividend king. They have increased their dividend for 49 consecutive years. So next year, next February, they will become that dividend king once they make that announcement.
So, Bert, what is Pepsi's dividend yield? It doesn't matter what Pepsi's dividend yield is,
I guess I walked right into that one, didn't I?
No, what's their dividend yield?
I don't know. You tell me. You tell me.
Their dividend yield is 3.16%. 3.16%, which is well above the S&P 500 index at around 1.5 to 1.7%. And obviously it blasts your online savings account well out of the Gatorade.
Yes, there it is. So hey, Pepsi, we see why they're on Lanny's watch list there. So to summarize the 3 companies, we have Verizon, we have
Unilever, and then the third company,
Pepsi.
And Bert, how many of these 3 do you own?
I'm not answering that.
Oh my gosh.
I'm kidding. I own Pepsi and I own Verizon. I've been buying Verizon. Man, I'm out of it tonight.
Now,
so
out of these 3, which do you like?
I like them all, but I'm serious. I would probably be looking towards buying Unilever. What about you?
I still want to finish my Verizon position off, and then next I actually do like Pepsi, and then I'll look at Unilever.
Yeah.
Only because Pepsi has been an untouched stock in my portfolio for so many years. Like, when's the last time you had a chance to buy Pepsi?
It's been a while.
Is it the stand style?
Yeah, no.
All right, so your order right now, is it, if it's Unilever first, who's second on your list that you would look at?
I don't know. I mean, they're all 3 pretty good. I would say I'd just get all 3 of them. It doesn't matter to me. They're all great undervalued dividend stocks. No need to rank them. They're just 3 great buys.
So what dividend stocks out of these 3 do you like? Which one out of the 3 do you own, or do you own all of them? And do you consider these stocks to buy right now for March 2021?
Yeah, let us know in the comment section. And please, if you don't do so, subscribe to our channel. Give us a thumbs up so we can keep bringing you dividend news and dividend stock watch lists.
Again, we're trying to get this content out to you to hopefully help you on your journey to financial freedom. Let us know if you have any other questions as well. This is Bert and Laney from the Dividend Diplomats.
Over and out.